school in 2016 and I went and worked for an angel investor, I was very excited to start investing in the space. So I ended up investing in Filecoin, Blockstack, Algorand, Zeppelin, all of these interesting companies in 2016 when the market was a little bit dead. In 2017, as the market started to boom, is when I realized a lot of people were coming to me and my co-founder Jennifer, who was at Union Square Ventures, and they were asking us, how do we do these larger orders? How do we buy 10 million of Bitcoin or 50 million of Bitcoin? And they could either go to an exchange and eat through the order book and get a really bad price, or they could go to an OTC desk, which was over the counter, and you would make a phone call, they would shop around, they would mark up the price. It was not very transparent. It was not electronic at all, or not online. And so it became obvious that there needed to be like an Interactive Brokers or Goldman Agency trading desk, just a more mature way to go and do these larger orders, via a screen, via electronic, route across exchanges, break up the orders over time, and really not move the market, but still put a lot of money to work if you were a larger institution. So that's where the idea of Tagomi ended up coming. And we built it over 3 years. So we raised our first round from Founders Fund, our second round from Paradigm. At one point, in our calculation, about 70% of the top 20 or so crypto funds were using us. And so actually our second round, we had Paradigm, Pantera, Multicoin, DCG. A lot of the crypto funds thought we were the best product. And so it was kind of a dire time when we raised our second round early 2019. Bitcoin had crashed from 20K down to 4K. And we really got support from our clients there who thought we were a great product. And then as the market started to turn around, we were getting some really amazing clients, certainly attracting the attention of Coinbase, which reached out to us and ended up acquiring us in 2020, their largest acquisition at the time. And it was structured as a primarily equity transaction. So we saw then another 10x or more of upside between that value and opening day of the direct listing. And so then Coinbase continued to run Tagomi. It became prime brokerage. Prime brokerage has clients like Tesla and BlackRock. So it was very fun to work with those sort of folks. And more recently, I left and have begun leading crypto investing here at General Catalyst. And very much like Gil said, along the way, I did a lot of angel investing while I was working at Coinbase because I just kept running into more founders and I had liquidity and I really enjoyed spending time with them, brainstorming, how do you get your first hire? How do you get your first client close? How do you fundraise? And sort of started investing alongside many of the great people who had backed me and our team, such as Paradigm or Elad Gil or many of the crypto funds. So it was really fun to kind of team up with the same people and this time play it forward more.
Awesome. Love it. So I guess one strategy is sell your product to the investors themselves and then they use it and love it.
Yeah, there's definitely a crypto ethos to that, a little bit of crowdsourcing. So
yeah. Awesome. Okay, well, given kind of your breadth of investing and your experience as a founder, we'd love to kind of dive into this choosing your primary market. So curious, like what considerations do you give to founders or do you think founders should take when considering kind of which primary market to go after?
Yeah, that's a really great question. And the honest answer is it changed for us. So when we started fundraising at the end of 2017, because all these people were moving into crypto and saying, hey, we need a prime brokerage institutional product to do these larger trades, it was all sorts of people reaching out to us. It was sovereign wealth funds, it was traditional banks, it was hedge funds, it was VCs, it was kind of people who had made a lot of money in crypto. It was these emerging crypto funds that seemed to all be run by some 19-year-old you've never met. And, so there was so many different types of clients reaching out. There was so much excitement at the beginning of 2017 and end of 2017, early 2018, when, you mapped out the client space, it was quite large. It took us a year to build the product. It's a very complex product to take these orders, break them into small pieces, route them across different exchanges, do all of those things. So it's very, very challenging. So it took us a year with a Citadel, Two Sigma, Goldman style team to build it out. And by the time we came up for air, Bitcoin was at 4K and so many of the people on our wait list were gone. So we really had to think about, or not interested, they were still around, just gone from crypto. So we really had to think about, who are our clients? So I would say there were two key learnings. One, don't be too fooled by the big institutions that show some interest. And, I don't want to name names because a lot of them ended up on Tagomi, several years later. But if you're talking about big banks or sovereign wealth funds or huge strategic tech companies, realistically, it's going to be a few years before they get comfortable using your product. And it can be very tempting to say, I have a meeting with Microsoft or Google or Goldman, and that means I'm doing well. But a lot of those meetings are really around they're getting to know you, it's the long sale, and honestly, maybe they're just trying to learn from you around the space. So you have to be really careful about, spending too much time there versus spending time elsewhere. And so one learning is like, who is actionable now versus later, and keep the later ones in check. Like definitely, give them some resources, maybe put them on your investor updates, things like that, but don't spend all your time and all your team's energy, and don't direct your product towards a long sale like that. Direct your product to people who want it now. The second learning is, of the people who want it now, you need to act a little bit like a venture firm. So for example, with Paradigm, Matt Wong had led crypto at Sequoia, Fred Ursum had started Coinbase, but their fund at first was kind of small. I think it was like 400 million or so. It certainly wasn't a Goldman or a BlackRock or something like that. But we thought, look, Fred and Matt are like incredible individuals. They're very smart. We're in a bear market. They're going to do really well. As the market grows, Paradigm could become a multi-billion-dollar fund. And so let's invest early on in making sure that our product has the feature set that they want. So, go after the clients who want it now. That doesn't mean go after every client who wants it now. Like, you have to be a little bit of a venture capitalist yourself to ask yourself, okay, which of these clients who want it now could I really see being large in the next bull market? Because they have the right team, they have the right attitude, they have the right background. So you're kind of acting a little bit like a venture capitalist, and you're deciding where to spend your time. So those are like kind of the two key learnings I would give to people as they're thinking through like this first initial client set.
Awesome. Okay, so just recapping there, be wary of very large, attractive customers that might not have an urgent need. The other is in those that have an urgent need, think of the ones that they themselves are going to grow and can use you to grow, and there's kind of a synergy within those two. Okay, so even then within that, let's say you've got a dozen niche markets that kind of fit this. Should you go after all of these sequentially? Should you go after them in parallel? And what are reasons to do one versus the other, or how many should you go after?
Yeah, so I think a really good one is, what is your core product? So a lot of people will have a lot of features and they say, well, my product is this and this and this. Okay, what's really the core? And then ask yourself, which vertical needs that core the most? Because they will help you improve your core product. They'll give you the feedback. So, if any of these verticals are kind of more niche, or they're your secondary product, I wouldn't go after them first. If there's a vertical that's, hey, that's sort of what we're building at the core, that's our thesis, that's our primary product, and there's a vertical that fits that, really embrace that vertical, even if it takes longer to go to market, because that vertical will give you the feedback you need and will be sort of these pilot clients that can be super helpful. So have a view. It's really hard to have a product where you go and you ask 100 people what they want. You do need some view. Once you have a view, let's say there are 10 verticals of 10, like which of those verticals is closest to your view, and try to have this intersection of your vision and the world that needs it. And then, of course, look, you might have to change, you might have to pivot, but I would at least try to start with choosing a vertical that's most in line with kind of your view of what you wanted to build.
Awesome. Okay, so have a perspective on the industry in the first place, which is why you're building what you're building. Understand where your competitive advantage is, and then use that to really choose the customers that will need that most, versus trying to match what everyone wants. And I guess part of this probably plays into you have limited resources. You can't build features for everyone. You can't go to market with everyone because it's expensive and takes time. So finding the people that will really help you the most in that sense.
Absolutely. And yeah, even if it takes longer, even if it takes slightly longer to come to market, because you might get sidetracked. You might be like, oh, whoa, there's this vertical here over to the left that's basically could find what I currently have as useful. Let me just run over there. But if that's not what you were looking to build, or your thesis, it's okay to take your time and work more closely with the clients who is this thesis for you, because I think it's worth kind of being somewhat consistent.
And do you see that there are any differences in blockchain versus traditional venture in terms of this go to market? Especially some of these markets may not even exist, right? There are a lot of successful blockchain projects that the markets literally weren't there before they launched. So how do you think about that? Where are the differences between blockchain and traditional venture?
Yeah, I would say bet on the space. If you're finding your edge, it's like maybe you're finding something is new. So for a while, there was one period where it was like kind of layer 2 scalability. There was another period where it was DeFi. Then finally, I think we got NFTs. Like there are these really cool trends happening in crypto. You can kind of look to your left and look to your right. You kind of know what the next trend is going to be. It's what all your friends are building around. I would just say, don't be afraid to embrace those and build for those clients. Like I think a big mistake in crypto is don't be a venture capitalist and do too much TAM work, because if I was doing that in 2016, like the whole TAM of the space wouldn't have been really big enough, right? So I think you do have to believe in the space. It's a very cool vision, kind of decentralization, privacy, owning, your own sort of assets, faster payments. There's so many cool things about this space. It will work and it'll be a lot bigger. So, look to your left, look to your right, see what those trends are, and don't be afraid to kind of build for those trends, and those clients that seem really tiny today could be massive clients in the crypto space next. So I really think it's fine. And, I do a lot of AI investing, and people ask me about this all the time. They say like, well, you do this AI investing, which has this massive TAM, we're going to disrupt Excel and like legal and all these things. And I am placing bets in those companies. And then they're like, well, how can you do crypto? It's such a tiny TAM. And like, but I would just say this, with AI, a lot of the benefits are going to go to the incumbents. It's going to be Microsoft OpenAI. It's going to be Google. It's going to be Facebook. When people are like, oh, I want an AI for Figma. And then 2 weeks later in the press, you see Figma and Adobe are integrating AI. So it's a little bit, a lot for incumbents in the AI space. One thing that's very cool about crypto is I think every sort of new generation of startups comes. It's not like the incumbents get that much value. Like if you see the first generation of like NFTs or things, it wasn't necessarily the big players, right? Like a Binance or Coinbase who never necessarily got NFTs. It was OpenSea that caught on to that trend. Or if you think about a decentralized wallet, it was MetaMask that caught on to that trend. Every time in crypto there's a new trend, it seems to benefit a new generation of startups, which is very, very cool. While the incumbents, of course, also continue to grow and do a great job when they remain ethical, like Coinbase is. They do a really good job as well. But there's this opportunity for startups that's, I think, very, very special about crypto, and it just plays through every generation. So sitting in your seat, if there's some new sort of technology or something that's really interesting and you're worried, well, the TAM is small, like all my clients would be startups, don't be. Like every single generation, that's exactly how it starts. And then those clients become big and the companies that service them become big or integrate or work with them become big. So don't worry too much about the TAM, like really, really build for what you think is the next trend that's going to happen in the space. And it moves really fast and it goes through these cycles, and you really want to catch one of those cycles early and have conviction early while it's still sort of small, and you can still build and be kind of unique in your approach.
Awesome. So a few questions about that. So if we look at the last cycle, right, a huge cycle in DeFi and a lot of algo trading and yield farming, et cetera. We had huge cycles in social NFTs. Now, a lot of those transaction volumes are down. Do you feel like those were real industries? Were those industries that were driven by value? Were they driven by speculation? Obviously, OpenSea did an amazing job in capturing a lot of the value, but now OpenSea is also facing a lot of headwinds. Not to say that someone shouldn't want to build an OpenSea, but how should you as a founder think about markets that are actually there, or markets that are driven purely by speculation, or markets that, they'll be here for 6 months, but then actually the value isn't there, especially now that we're in this bear market and not sure of how long it'll last?
I think it'll be a mix. So I think like a lot of things that we're working will come back. Like I do think social NFTs and DeFi, taking them one at a time. I think with social NFTs, it got overhyped and then it crashes. No one really likes that pattern. It's hard to get back in. It's almost like a reflective asset, right? When it's doing well, people want it more. When it's doing poorly, people want it less. It's very hard to break that, but it does eventually break as sort of a new generation comes in. So with social NFTs, et cetera, I think what we need to see first is maybe more social wallets, like wallet messaging, easier to see what you have in your wallet. And then again, like when that infrastructure is there, maybe there'll be more social NFTs that you'll want to share. So I think that will come back, but it will take some time. Same with DeFi, real rates went up. You can get, I think, 4.5% or something in a 2-month treasury. Just a year and a half ago, you could get less than 1%. So that's made DeFi much less competitive. Rates will go down over time as inflation goes down. And so, DeFi will be more attractive again. So part of the answer, I think, is, yeah, the old trends will come back to some degree, and the players who are embracing them will do better. And you've seen a lot of, great companies like Coinbase kind of go through these cycles. And so that will happen. But maybe what's even more exciting to the people on this call is like when social NFTs come back, something will be different. It won't just be Jake Paul hyping his whatever NFT, right? It might be something very cool, like a social network built around certain NFTs you have around your identity that allows you to chat with cool groups, or, it's not going to come back the same way. It should come back better. And I think it's kind of up to the people on this call to think about like, okay, as these things come back, what's a way to do it better? And like, what could have 10 times as many users as the previous round of, social NFTs? And why should it have 10 times more users? What's the use case? Why is that better? And so I think those are sort of the questions. So have confidence and things will come back. Many of the existing players will do better, but there's always in these markets a huge opening for someone who comes and decides to like really, really change the game a little bit on it.
Okay, awesome. A little bit more on this topic. So kind of earlier you mentioned that you should find someone that has a real need right now. A lot of the people that have a real need for many of the projects that people are building, whether it's infrastructure, wallets, etc., these are like native Web3 audiences. These are the degens who were a lot more active 6 months ago than they are now. Do you think that, or do you have any recommendations or thoughts around kind of should projects be focused more on, for their initial market, a native Web3 native market, or should they look more at kind of potential like broader based Web2 users where there's potentially some complexity in terms of being able to get them and solve their needs and user experiences, but it's a different market and it's a larger market? Yeah,
I think be true to yourself. Like, if you are a crypto native degen and you're still yield farming and you've held on to your NFTs and, you're looking at all the Z snark rollups and, you're really into this stuff and you want to build on Bitcoin, and like, be true to yourself. If that's who you are, like, build a product for you and build a product for your community. And my personal belief is there will be more and more crypto native people going forward. And sure, you can look at a few months of up or down, but if you start looking at things in terms of years, how many crypto native people were when I started angel investing in 2016 versus 2017 versus 18, 19, 20, 21, 22, 23. Maybe there was some dip in there, but you can't compare 2016 to today, and you won't be able to compare today to 2030. And so like, don't worry too much about timing that. If you feel like you want to build something that's more crypto native, more complex, and is for you, like, be true to that. And just know on the funding side, maybe keep a super low burn because you have to ride out this crypto recession for a while. So I'm not saying ignore it, but, definitely build for who you want to build for. Startups most don't work. So at some point you have to realize like you really need to be passionate about what you're doing. And then the second is, look, maybe you came more from the gaming industry and you just think crypto is really cool because now inside games, you can have embedded wallets. Inside games, you can have NFTs that you can take from game to game. Inside games, maybe it's a truly decentralized game like Dark Forest or something, and you really love that idea of like no one can come shut this thing down. So maybe you're a little bit more Web3 oriented, but you think you're more Web2 oriented. You've spent your whole life doing traditional games, but you see the promise of crypto. Maybe there you should build an embedded wallet product. So I think a lot of what you build is around like, what's your background? What are you passionate about? What's the need you see? And I think people will be really good coming from like a more traditional view and building for, Web 2, but having cool Web 3 elements. Other people will be truly just Web 3 all the way. And I think it really just depends on like what you want to build. But I think there'll be successful companies in both those buckets. So don't let like some investor tell you to do it one way or the other way. Kind of do what feels right for you.
Awesome. Okay, that's super helpful. So what I'm hearing is make sure to be authentic to yourself, your own strengths, your own insights, because that's what's going to give you your competitive advantage, but also don't be completely ignorant of market conditions. And if you're doing something that isn't kind of necessarily aligned with current state, then you have to keep a low burn and be aware that it'll be harder to raise, which is fine. But kind of staying to your own knowledge, insight, and authenticity will give you that advantage in the long run.
Exactly. Yeah, 100%. It's really hard to pretend to be something you're not. Like any company you're creating, you have to really believe you're the best person in the world to do that company, which sounds a little bit psycho, right? Like that's can't be true. So it's even less likely to be true if you're going and deciding to do something because an investor told you or whatever. You really need to be the best in the world at whatever you do. And it's just really unlikely you'll be the best in the world at what you do if it's not something you really believe in, you're passionate about, you have the background in, you understand the client for, you're able to attract the team around. Like all those things are really, really important.
Right. Just to like kind of double click on that a little more. I mean, there are times where you're creating a technology. The technology can be applicable to multiple spaces, right? If you're doing account abstraction, you can look at account abstraction as a means of solving problems for kind of better user experience, Web 2 like user experience in the wallet space for people not to have to worry about that at all. Or you can look at more Web 3 native games. Like these are as a developer, they could be equally as attractive. Like how might you think about one versus the other?
And then the other, absolutely. And then the other thing, which I think is really great, is once you're actually in it and you've launched your product, you're building for your client at that point. And I think that they're like, don't get too tripped up. If your client is like, oh, we need something to be faster, like maybe make a trade-off on the decentralized side. Like be pragmatic. I do think that if you look at the most iconic companies, not just in crypto, but in general, they're very, very client oriented. They're not like looking at some market map and deciding what's missing. They're really, really obsessed, product obsessed founders servicing their clients. So once you get to that stage where you have clients, maybe if you were so, Web3 gung ho, you might end up making some compromises. And maybe if you were purely Web2, but now you're serving these crypto clients who are asking for all kinds of things, maybe you're starting to integrate more interesting crypto native pieces. So, hopefully your clients will pull you in and help you get that right balance.
Gotcha. So not to be too dogmatic or ideological once you actually have your customers and you've chosen and kind of validated your market. How do you know if you've chosen the right or wrong market? Like you're building, you have some interested customers. A lot of the teams right now, they have design partners. Some of them are in vastly different different industries or sectors. Like, how do you know if you've made the wrong decision and you should pivot?
Yeah, I think for us, it was really when we were talking to certain clients and they said like, hey, we were waiting for someone like you to come along to be able to do this. So I think that's a really powerful statement. Like ask your clients, like how useful this is, what do they want, like talk to them. And if you're starting to hear from them, like, yeah, I really wanted this, this was missing. My first startup that failed, I didn't get a lot of that, to be honest. And so in the second startup, I felt like something was really different there. So get to that point as soon as you can. And like, don't play startup where you have to like hire a bunch of people and do marketing and have a big website and all that. Like those check the box things aren't really milestones. The milestone is really all around the clients. Like, is the client telling you that they need this? And there was nothing before you that really compared. And then I think once you start hearing those things, then that's really exciting. And that's when I think you want to double down and you want to do all the marketing and the branding and those pieces.
And what about for more kind of user-focused projects? Is this just kind of seeing engagement from users themselves and user communities?
Yeah, exactly. From the users themselves. And I would say, especially, a lot of people think that the most important metric is up and to the right. It's not. It's really around the retention. Like once you have a client, are they really sticky? Do they use you a lot? Because you can always figure out better ways to get clients to do top of funnel. But if your actual product is broken and they're leaving once they're there, that's not fixable. And so I really think that for the consumer projects I've backed, it's very much around that retention. Your initial clients love you and they don't leave and they use you a lot. And ideally, they tell other people. But don't get too upset about the tell other people because you might need to build in certain viral loops that really help out on that. Or you might need to get really good at top of funnel. So there are ways to improve and to grow up and to the right. But the most important is like the product, the people who are using your product really, really love it. And from there, you can do a lot of things, I think.
Okay. And I guess like, say I'm a founder, I've got 3 or 4 different sectors. I've got a couple of design partners that I'm kind of iterating with that might be in different sectors. Maybe one is in the identity space. The other is in a DeFi space. Another is in gaming space. At some point, I need to make a call to kind of build out more of a product, build the product out more in one direction or another. Before building everything or after building everything and kind of going to market in this one sector, are there specific indicators that I should be looking for that, like, as soon as this happens, like a hypothesis to form, where as soon as this happens, I know I'm in the right kind of path. And if I don't get, for instance, like you just described, clients asking for features and actually kind of engaging with you more. If they don't engage with me for 3 months after I work with them, should I then drop it? Should I keep having iterations for 6 months? Like, what are some indicators that you think are helpful for someone to know if they're barking down the wrong tree?
Yeah, I think the other side has to be investing in you. So obviously the most obvious way is they're paying you. That's always great. But if they're not paying you yet, but they're putting a lot of their own resources, so their tech resources are being matched against it, or their CEO is getting on the call with you a lot to talk through your product. If they're putting a lot of resources from that side, that's good. If they're paying you, that's also good. Sometimes you have to get better before you get paid. We had a lot of that at Tagomi too. But they need to be investing somehow, either money or their time. I think when they sort of string you along, you have a lot of meetings, they kind of use you a little bit, they're not willing to pay, no one on their end is really doing any heavy lifting, that's when you have to ditch it. In terms of like, should you go with the DeFi company or the decentralized identity company or yada, yada, you kind of have to have a view. Like, that's the sort of venture capital part about being a founder. Like, which of those areas do you think adds the most value in crypto, and where are you seeing the growth? And you do have to make a call on that. For us at Tagomi, we made the call that crypto funds would be a really key partner, because we said, listen, these endowments and LPs have given these crypto funds money. They now have it. They have to put it into crypto. So even though the market's horrible, these guys are going to stick around. They've already signed all these docs saying they're a crypto fund. They took their LPs' money. They're going to be investing in crypto. Our thesis is these crypto funds will stick around. And if the market turns around, they'll have really good performance, and therefore they'll become big and they'll be huge clients. And then, and it was true. Once we had all these great crypto funds people started to know about, we started to get traditional hedge funds. So you do have to think a little bit strategically in terms of, what's the plan? Like, which client set is the most attractive to you? Who's going to, and the two criteria, you can use my two criteria. The client set A will survive this bear market. And number two, will do really well in the bull market. So you have to ask yourself that. And is it DeFi? Is it decentralized identity? Is it NFTs? You have to make a call on that. You have to ultimately have some sort of view, because you can't service everyone.
Awesome. So I like that a lot. Will it survive the bear market, and will it do well in the bull market are great indicators, because that's exactly where we are. Along a similar vein, a lot of blockchain, again, a lot of blockchain projects are horizontal, whether we're talking, especially in the infrastructure space. How do you know if you should vertically integrate, right? And there are many projects that launched that perhaps initially didn't vertically. You're a layer two, and providing scalability and performance. There's an argument that you're able to create a platform and people just use it. But then again, if we look at layer twos, most of them, the first thing they do is they either develop themselves, or they have an ecosystem fund where they support a DEX and DeFi, minting NFTs, etc. So it seems like ultimately they are vertically integrating. How do you think about a blockchain project? And to what degree should founders be thinking about if they need to vertically integrate to be successful, or if they can rely on someone else will build on their platform and tool?
I think especially in the bear market, it's hard to rely on someone else who will build. There may be fewer folks testing things out. I would say care more about the customer than the business model to start. A lot of vertical integration is based on this business model thought that, we can cut costs all the way through, we can own the entire experience, and we can be really profitable. But I would just really, really go with what your customer wants immediately or sooner. And then over time, you can maybe vertically integrate to be a better business model. Now, if it's actually the customer wants vertical integration, like maybe some of us are actually slightly annoyed we have to have a separate wallet and DEX and all of that. So if your thesis is, well, actually, I just want a seamless experience like an Apple OS, and kind of go vertical integration will make this better for my customer, then maybe that's interesting. But if a lot of the time your vertical integration thesis is, well, that's a way to maintain costs and have a better business and be more profitable, I would try to stay away from that. I would try to really go to like, what's the best customer experience? Once you have the customers, once you have a good experience for them, there are a lot of different ways you can monetize, both in terms of adding new products that are higher margin, or in terms of cutting costs by either scale or vertical integration. So I think, you live or die in these like 12-month cycles because you're raising every 12 months or so. And I know people always message, 2 years or whatever, but if you look at the good companies, they're all raising every 6-12 months and kind of scaling quickly. So every 12 months you live by that cycle. So it really is around like, how can you get a new feature that a customer wants and more customers? Those are really the things you should obsess about. And then as you're getting a bit more scale in 2 or 3 years, maybe vertical integration makes a lot of sense for many different business reasons.
Okay, so that makes perfect sense if you're vertically integrating for the sake of cost cutting. But what if you're vertically integrating because the customers themselves aren't necessarily there? Like if you're building, again, like a layer 2, the people that are going to be like, why would anyone use your layer 2? Well, because games can be developed faster, but if you don't have enough game developers, maybe you need to develop some games yourself. Like who is that customer and how do you get to that customer? I'm curious what your thoughts are, if it makes sense to vertically integrate or when it makes sense to vertically integrate to reach a customer. Otherwise, you're relying on other people to build on your platform, especially if you're more on the infra side.
Yeah, if your platform is really that much better, then it makes sense. But I tend to think that it is very hard to start like a new layer 2 today and create an ecosystem around it and compete with Ethereum or even some of these Ethereum competitors. So my general preference as an investor is like I'm a little bit more skeptical of those sort of plays rather than, hey, I can link up on ETH or on Solana or on all these other platforms and do a bunch of things kind of cross-chain. That feels like, and I'm solving like these client needs cross-chain or these consumer needs cross-chain. That for me at least is a better pitch. I think a lot of, honestly, the like new layer 1s, new layer 2s feel very pump and dump. That's just my personal opinion. And maybe there's some money to be made there if you get the right investors involved and the token pumps. But realistically, I think a lot of the like platform and infrastructure, we've been working on crypto for over 10 years. Some of that stuff is set. Like I really encourage the people on this call to think more about like, what are the consumer use cases that we can now build together? Or on the infrastructure side, where I'm a little more interested is data, being able to understand it on-chain, off-chain, security, how do you make token drops and wallets and smart contracts safer? Like I think there is a lot of interesting infrastructure. And I certainly think there's a huge opportunity for consumer. We have such a great early adoption group of people around crypto. I'm much more skeptical that there's going to be new layer 1s, layer 2s that are significantly better than the ones today, and the ones today are improving as well. So I'm just like generally not investing in that thesis unless it's an amazing technical founder who really has a 10x idea there. But I think you're much more likely to stumble across an infrastructure piece that can be cross-chain or a very cool consumer use case that makes someone's life better. Those sorts of things I think are more interesting to me as an investor.
Awesome. Super helpful. I was going to ask about types of customers teams should build for. Actually, why don't I ask this anyway? What are the types of customers that you're thinking now that teams should build for the current market conditions? I know earlier you mentioned like things that you're things that a founder is knowledgeable and authentic to, but kind of taking a step back with your investor hat on, what are the things that are exciting you in the current market conditions?
Yeah. I mean, one of the things to look at is like number of people who have owned Bitcoin or number of people who have a crypto wallet. That continues to grow. And it's a very big ecosystem today versus even 5 years ago. And 5 years is not a long time. Like if you look at Coca-Cola or Walmart's business 5 years ago or today, like, it doesn't look that different. Crypto is so different in 5 years. We're continuing to grow. So I think people who are building around those things that continue to grow will do well. So, wallet infrastructure, how do we do maybe wallet messaging? How do we make our wallets more secure? I think those are all very interesting. People are going to trade more and more on DEXs. So continue to build tools for DEXs, maybe things that make it easier to do KYC AML or tax pieces. I'm an early investor in things like Sardine and TaxBit and TRM Labs that all fit those themes as an angel and an individual. And so, think about what's going to continue to grow. More people are going to use crypto. They're going to need help on taxes. More people are going to use maybe DEXs. They're going to need certain KYC AML, or they're going to need a platform to track all their accounts in one place. More people are going to be using wallets. They want those wallets to be secure. They want those wallets to be able to message other people. Maybe they want group buying in wallets or all kinds of features. So think about the things that just, as you step back and you think of the last few years, not, this year versus last year, this year versus 3 years ago, where are the areas that have really grown? And building products around those areas that make those things easier and better and faster and just more intuitive to use. All of that is like, I think, a really nice thesis, and start investing in, founders who are really passionate about that. Okay,
awesome. So teams that are looking at the growth of the industry, how to drive growth of the industry by making it easier to use and how to support the needs of a growing industry.
Exactly.
Awesome. And what are some common mistakes that you see people make when building their companies, especially when choosing their initial markets, but also just in general when you're building that first MVP, your first kind of product version and rolling it out?
The most common mistake I think startups make is they feel a bit rushed. So they hire 5 to 10 people and they say, well, I can always hire better people later. Once I have more money and I have traction, I'll be able to hire better people because why not? I'll have more money I can pay them. I'll be a more famous brand. I'll have more users. It never works like that. The people you hire, like 5 through 10, will hire their friends for 10 through 50. And it always works like that. And that will be the culture because your group of people will decide who to hire. They'll be the top of funnel. There's just so many just reasons that will exist. So don't make mistakes there. Like that really sets your team forever. And if it sounds dramatic, but it's really not. Like, I guess with Facebook, Mark Zuckerberg got the best people he knew from Harvard and the Math 55 competitions and stuff. And in my portfolio, for example, I'm an early investor in Ramp. I think they've just done such an amazing job. Their first 10 hires also were like these like math, computer science Olympiads and all that sort of stuff. Like you never get those people later. Like you have to start with the right people. And so I think the most common thing is like, don't check the box. Now I have a designer. Now I have 2 front-end people. Now I have a back-end person. Now I have a DevOps person. Check the box, check the box, check the box. I think it's really, really important to like just hire the absolute best people you can. Maybe at the beginning, some of the roles you can't hire for, you contract out. Or you're just worse at it at first, your design sucks or something, but later on you get that designer that you really want. So I think that's a really hard part. People think hiring is progress. It's really, really not. Hiring the right people is progress and sets you up for progress. And that is just like, I think by far the biggest mistake people make, besides obviously sometimes choosing a bad idea or a bad market or, not fundraising enough or the really obvious things that can kill your company early. The unobvious one is hiring like B plus players in the first 10 and allowing for a competitor to come along who started with A minus players or whatever. You will die in that situation.
Super helpful. Along the kind of that vein, are there things that you should never outsource? Or are there things like that it's okay to outsource for longer? How do you think actually about outsourcing in general when you're a super early stage startup?
Yeah, don't be too dogmatic. Like I think it is okay to outsource a lot of things. And then to bring in-house or have in-house your core competencies. I view it as a strength when founders like know what they're really good at and what they're not good at. And then they say, okay, I'm going to really focus on what I'm good at, and some of the not good at stuff I'll outsource. Eventually, sure. If you're a Series B company, like, I want your design team in-house. But, if that's not you at the beginning and, you really, really focus on other things and you can't hire a designer and you outsource that, like, that's fine too. A lot of companies, I think with Airbnb, like where I worked at back in the day, I think one of the founders was like kind of an outsourced guy himself, helping on the side on weekends or whatever. It wasn't all in like, the startup dogma says. But then as the company started working, he came full-time in-house and all that kind of stuff. So yeah, I just wouldn't listen to people who have all these like strict and fast rules. Your company is unique. And as long as what you're really, really, what you're good at and you build on that core competency, I think it's fine to outsource other pieces.
Okay, so the core competency is the one that you shouldn't necessarily outsource. So if you're building heavy infrastructure in one way or another, then you shouldn't be outsourcing your CTO.
Exactly, or your back end. But on the other hand, you're creating a really cool NFT project and you outsource your CTO, maybe that's fine. So I think like whatever you're really great at, make sure that you have in-house, obviously.
Awesome. Trying to see what else we have here. We have a couple questions from the audience that they'd submitted earlier. Would love to. Actually, one last question that I have on from the original set. How do you think about token launches? And should those be earlier? Should those be later? Who should, how does that kind of affect your consideration around initial markets, et cetera?
Yeah. So definitely, since 2016, I've seen a lot of token launches in a lot of environments. I would say the one thing that you should really think about is that, your token becomes your company. So when people think about joining your company, they're like, yeah, but the token's down 30%. Okay, but we've built out the product, we have scaling, we're doing massively successful, all those different pieces. The token really doesn't reflect your company, but it will for everyone outside it. For your investors, for the people thinking about coming and joining you. So I really think that the token launch, you want to do that once you're using it for rocket fuel. Like BNB, Binance did a great job with this. Like it was already a very popular exchange. It was already doing well, but now it wanted to expand to more and more regions. And by issuing BNB, it really aligned like all these new users in this bull market expansion with them. And using that token really got them rocket fuel, as CZ would say, for it. So, I think like token launches are once you've figured out the model, once things are working, when you want to really incentivize your existing community and you want to hyperdrive your community. It's not something you want to do too early on, because if it ends up flopping or you do it through a bear market, it's much, much better if you hadn't done it and you in some ways only get to launch your token once. So.
Gotcha. So, many products have used token launches to kind of kickstart their community. What are approaches that you would recommend to kickstart a community if you're not going to use a token launch? If you're going to use a token launch to really, once you have your community, you want to hyperdrive it. What are some thoughts around kind of building that community in the first place?
Yeah, I think not many have used a token to kickstart a community successfully. There've been a lot of, okay, I used it to kickstart something and then it dies off. So I really, maybe other people disagree, but I'm around the school of thought that once you have a community and it is growing, you use your token as a hyperfuel for it. That's my thesis, and I could be wrong, but I haven't seen a lot of projects that really get kickstarted with the token that then are lasting. I haven't seen too many examples of that. So I think it's really important to have your community in place first, to be growing, and then to use the token as a governance mechanism. That's very cool, to use the token as, an incentive as well. But there has to be something there that it's representing. Like if you're just hyping it up, that's not sustainable. Like there has to already be some magic there. There already has to be a flame before you put the fuel on it. If you just dump fuel on a fire without a spark, like nothing's going to happen there. So that's at least my view. Maybe I'm just plugging in my computer, but maybe that's a little controversial, but I think longer term, you're not going to be that successful launching a token too early.
No, I completely agree with you. It goes back to what you said earlier, which is customer acquisition versus retention. And if you launch a token super early, you might have great acquisition and kind of that hockey stick growth initially. But unless you know that you're providing real value or you have your tokenomics really defined and the value's there for the users, the engagement's going to go down and they're just going to drop off, or you've launched it to the wrong people. Whereas once you actually have figured out product market fit, so to speak, and people are gaining value from your platform, whatever it is, then launching a token helps kind of drive that forward.
Yeah, I really believe that. And, I've seen that over the years. So I'm happy to entertain counterexamples. But I think generally, if you're giving advice, what you just said is really accurate in my view.
Awesome. So a couple of pointy questions that some folks had asked, which is, to what extent should founders sell before they build? Meaning, should you be selling something before you've actually built it, or should you be trying to partner with your design partners? Kind of this, how much do you fake it till you make it versus how much do you develop and kind of actually have something that's real for your design partners or customers?
Yeah, I think this comes down to like pilot clients versus then, your mainstream clients. With a lot of our Tagomi pilot clients, like we didn't charge them because we didn't have all the features they wanted yet. But we had an understanding that as we got to those features, we would start charging them. So that stage was like a pilot client stage. So I think at the beginning, you really focus with these pilot clients, and what you're looking for is feedback from them. Feedback around like the product, engagement, and sort of like I said earlier, an investment, even if it's not financial. Their best people are on the calls. They're maybe committing some dev resources to you. So at the beginning, I think with these pilot clients, like they need to be committing resources to you and they need to be helping you grow the product. And then you change mindsets. Once you feel like your product is the best product and it's solving, the majority of people's need and it's the best product on market, then you really want to start charging. And for those set of clients, then, they need to be paying. And, it's if they could use you, but they're not willing to pay, then you really don't need them. Like maybe go back to them once you have more features or something and ask them to pay then. So I think it's really a question of like, be very clear in your mind. Is this client a pilot client or is this a paying client? Don't have any of the weird in between. That's where people get killed, where it's sort of like, no. Like they're not giving me a lot of feedback, but they're using me, but they said one day they'll pay me, but they're not paying me now. Like those clients are fairly not useful to you. So either a client needs to be giving you feedback and needs to be engaged or needs to be paying you, and just don't settle for anyone not in those two buckets.
Awesome. Right. And that way, if they're the right client or not. And I guess even with the pilot clients, it sounds like you're saying that have a very clear understanding of at this point, once X or Y are complete, they would be willing to pay and actually invest beyond just people.
Exactly, for sure.
Another question here is, how do you sort through feedback of knowing what people say versus what they actually need? So when interviewing, when talking to customers, curious if you have any thoughts about that. I think this is some of the teams are interviewing a lot of prospective either design partners or customers and are getting input.
I think one thing that's helpful is like, maybe you don't have a full product yet, but get a mock-up. Like, we had a series of conversations where we just talked. Those were not useful. We then ended up doing just this video animation. And today, probably there's AI you can use for this, like, I don't know, Stable Diffusion or someone. But like, even having a video you can show or a mock-up and running through it, you're going to have such a better conversation than if you're just chatting. Like for us, we were just chatting around like, okay, so you're trying to do like, this was with Founders Fund and Peter Thiel, like, okay, you're trying to do like a $50 million order. How long would you want it over time? That conversation was so much less useful than, okay, we created a small video of how the product's going to look like. And they're like, no, we need a drop down to do this. We need a post-trade report. Like, wait, what's a post-trade report? Oh, post-trade report is we need a screen that shows, how the trade was conducted on which exchange. And we're like, oh, like the conversations are just so much better, even if you have a mock-up or a video or whatever. And that's a bit of the fake it till you make it. Like, I could see a lot of founders feel a little bit hesitant. Oh, I'm gonna just show them a animation or something. Like, I don't want to do that, but yeah, just show them the raw stuff you have, or maybe it's the product live, but it like messes up all the time, and just have like a comedy routine around how it messes up all the time or something that makes you more comfortable with that. But I think trying to talk to clients and have something actually in front of them that they can play around with or they can visualize, those conversations will be a lot better. It is very, very hard and maybe even impossible to just like use a deck and talk through stuff and learn from clients. You really, really need these interactions to know what they care about, because even they don't know what, the post-trade report came up because we're going through the video and we're talking about the pieces and where to click. They wouldn't have known to bring up the post-trade report if we were just talking through a deck, for example. So I think like really having something a little bit raw can trigger those people to be much more helpful. They don't mean to mislead you. They don't mean to not be helpful. It's just very hard to do with a conversation in a deck versus something that elicits, the use case itself.
Awesome. Super helpful. Right. Really having them go through their experience and seeing where you fit into their experience and where you don't fit into their experience, and understanding that, and that feedback is really helpful. Awesome. So we've got a few minutes left. I'll open up the floor if anyone wants to write a question in the chat.
I just answered everyone's concerns, and we're all ready to go start companies now. So I think, mission accomplished.
Yes. Thank you so much for all your comments and all your advice. Where's the best place we can reach you after this?
Yeah, definitely feel free to add me on LinkedIn. And I think like my Gmail is attached to that, so you can email me there. I'll also give Gil my General Catalyst email as well. And so, people can reach out to us. I'll also flag that from General Catalyst, Mary is on this call as well, Mary Gao. So we'll be sure to get her email also. She kind of runs the pre-seed, seed piece of crypto. So she's going to really invest in this group, and this is her sweet spot. And then I obviously come in and we tag team on getting a lot of the deals over the finish line, but she's a great person to get answers from and build that initial relationship as well.
Great.
Yeah, shout out to Mary. She's really helpful and super insightful.
Thank you too for the kind words. Would love to connect further down the road with the rest of you guys.
Awesome. Actually, Marc, I do have another. Sorry,
would it be all right if I asked a question?
Sure.
Yep, sure thing.
Sorry, I was typing now and then I realized I should just say it. I'm wondering, Marc, would love your thoughts on like competition and encountering other folks, particularly in the space. Crypto is smaller, right? When you encounter folks that are doing something similar, or maybe a little farther along and have like a similar thesis and vision, I'm just curious how you think about that. Obviously, competition also can indicate that it's good, that there's actually a need, but I would love to just hear what your take is on that.
Yeah, I like to stay in the middle lane. So the left lane is people who obsess about their competition. And it's like, oh, this company is doing X, so we can't do X. We got to do Y instead. Like crypto has had so many iterations of, better and better founders building products better. So don't obsess about your competition and think like you can't do something because of it. I think Paul Graham is like startups die of suicide, not homicide or whatever. Your competition is unlikely to kill you, especially in a space like crypto, which is always changing and evolving. But I also don't like the people who are on the far right lane, which are like competition, like who cares? I'm not even going to pay attention. Like I'm so focused on myself and my company. And that's great that there's competition. It really just means the space is good. That also sounds kind of like bullshit. So I kind of like the middle lane, which is like, be aware of your competition. You need to know for venture funding and for talking to clients, like who are your competitors? What features do they have? How do you compare? Where are you stronger? You need to know that stuff to win over someone in recruiting, to win over a client, to win over a VC. So you need to know that. But at the same time, don't let that kill you. And don't let your strategy be planned around what competitors are doing, unless they're really direct competitors and it's a pricing war or something. But generally, that's not going to be your case as a startup. So kind of know what you're good at, know the competitive set, really focus on what you want to build, your thesis. Even if someone else is going after that thesis, like, again, maybe you're more passionate, you're better at execution. So I really like that kind of more balanced middle approach of being aware, but not obsessing.
Cool. Appreciate it.
I like that as well. Knowing who your competition is, knowing hopefully why you're better than them and why you're able to play in the same market and outcompete them.
Totally. Well, awesome. I think we're almost on time here, so I'll let Gil kind of close it out maybe for us.
Yeah, no, Marc, thank you so much for your time, your insight. This has been super helpful, I think, for the teams at large, and really appreciate your time. And look forward to kind of working with you and having the teams work with you in this coming bear market that we have, where we have people that are really passionate about the space here. So thanks again.
Absolutely. Thank you guys for having me.
Awesome. And this should be recorded in some capacity. So hopefully we'll be able to post the recording in the coming days. Thanks, everyone.